Good afternoon, and thank you all so much for joining the Teach Coalition in the middle of your day for what is sure to be an informative and interesting discussion on charitable giving from both a Torah and a tax perspective. We are thrilled to be joined today by Rabbi Moshe Howard, the Executive Vice President of the OU, as well as Teach PA activist and tax attorney Joshua Weinberg. Rabbi Moshe Howard joined the OU earlier this year as its executive vice president. Most recently, he was the Rav of Congregation B'nai Jacob Shari Tzion in Baltimore, Maryland for 25 years, in addition to being active in both national and local communal leadership, education, programs for at-risk children, and social service organizations. Rabbi Howard is also a founding editor of the online journal Klal Perspectives and leads a leadership training program for both rabbis and communal leaders. And he lectures on a wide variety of topics in Jewish law, Jewish thought, and historical and contemporary issues. Josh is an attorney at Cozen O'Connor who specializes in tax, nonprofit, and tax-exempt organizations and real estate lease restructuring. And he's been awarded Best Lawyers in America from 2018 to 2021. He graduated from the University of Pennsylvania Law School, where he was an editor of their law review. And he is also a community leader in the greater Philadelphia area, where he lends his time and expertise to many schools and organizations, including Teach PA. And he is on the advisory board for the Philadelphia Area Schools Tax Credit Scholar Program. So Rabbi Howard, thank you both so much for joining us. First, Rabbi Howard, I wanted to ask if you could talk to us about tzedakah from a Torah and a halachic perspective, and specifically, what are the things that an individual should be considering as they think about their own personal charitable giving?
Okay, first of all, thank you, Katie, for the introduction and for the welcome and for the opportunity to be together with you and with members of the Teach Coalition family today for this discussion. The question of how Torah speaks to prioritizing in charitable giving, I'm just reading here from the briefing notes which Maury sent me. It's very clear. It says that approximately 80 to 90% should be given to the Teach Coalition. No, I'm sorry, excuse me. Okay.
That's great.
The issue of prioritization when it comes to charitable giving is something which indeed halacha speaks to. One important perspective to recognize is that sometimes halacha, Torah, is very prescriptive, and it tells you, in a certain sense, exactly what you need to do. You know, this is how you make a matzah. This is what your lulav is supposed to look like. This is what your sukkah looks like. Right. When it comes to the laws of tzedakah and the practice of tzedakah, it seems more so to be the case that it gives us values to consider as we prioritize. But there is, for instance, an important halachic concept, which is found even in the more prescribed rules of the tithes, called tovat hana'ah. Tovat hana'ah is the right of the person who's separating the tithe to decide who he wants or who she wants to give it to. We have a certain discretion to be able to give, to choose, and charity is something which is supposed to have something of that personal choice which is there. Nevertheless, there are values which guide those priorities. And the most known and clearly expressed is that the Sifrei, the halacha, the Talmud, derives from the way the Torah presents the mitzvah tzedakah, that there are priorities for immediate family and for immediate community. The idea behind that is, seems to be very instructive. And that is, we have an expression in English where we speak about the idea that charity begins at home. And the concept there is that before we go and do interesting things, attractive things, we need to think about those who rely on us, those who depend on us. Family and community look to us as those who they depend on. And therefore, as a result of that, they become our priority. Those who depend on us need to be our priority over our more entrepreneurial, efforts when it comes to matters of charity. And there are ramifications of that, of course, for people who have family members who themselves are needy, and it's matters of individual charity or communal needs. My particular community relies on me as a community member. And I have to take the lead and I have to show it. I happen to live right now, I live in Baltimore. A communal institution in Baltimore can't go to Cleveland or to New Jersey unless it's an institution that serves people nationally and say, here, support our day school. We have to, and we have to support as well the efforts that will help our local community, statewide community, and so on and so forth. It's a perspective of responsibility. If not me, then whom? We are the ones that they rely on. They look to us, and that, in a great sense, should guide prioritization. I'm going to say just one more word, one more thought, to add to the mix, till we have a chance to continue the discussion, and that is that there is a value in every area of Jewish life, of a person pursuing something for which they have a specific interest and inclination. It's true, for instance, the Talmud says, well, Torah study is a great value, but a person is supposed to study b'makom shelibo chafetz, subject matters that they have a particular interest in. And it's beyond the scope of our short discussion here, but this is something which was valued. The individual's taste and drive for a specific area of charitable giving, like in every other area of good works, like in how we even choose our career and the things that we do, is something which is respected. And one thing we have seen as a magnificent growth in the tremendous philanthropic efforts that we find within our Jewish community is the motivation that people have to make a specific difference in an area which to them is important, is significant, and where they feel they can really move the needle. And that in itself, for that individual, becomes a priority. It may not be an objective priority, but for them, yes, people are given interests and drives, and that's going to be their contribution to the world, not just to the organization.
Great. Thank you. That's really insightful and really beautiful. And I think is a nice way for people to be thinking about their own charitable giving, in particular, as we do approach the end of the year, which is a common time for people. Hopefully people have been thinking about it throughout the entire year, but many people are really focusing on it right now at the end of the year and in December. So thank you so much for that. So Josh, given that we're at the end of the year, can you talk a little bit about, I know there were a number of tax changes that took place this year. So if you could speak about those a little bit and things that people should be aware of as they're making their year-end contributions this year.
Sure. Thank you again, Katie, for the introduction. Thank you, Rabbi Hauer, for your insights, and again, thank you for letting me participate and join this. So yeah, as you mentioned, Katie, there were a bunch of changes to the tax law this year. It was done in the context when earlier this year, Congress passed a number of relief packages in connection with COVID, and businesses received loans and grants and the like. But part of that, Congress kind of loosened up a little bit the rules dealing with charitable giving. And part of the thinking is that whereas there's been unfortunately a great deal of economic distress in the country due to COVID, and a great deal of the relief was going to come from the government in the form of loans and grants. Part of it was just, I guess, to encourage further charitable giving by those who had not been as adversely impacted by it, to help those who unfortunately have. Now, the changes that were there, it's funny, it's interesting, the way they come out, the primary changes seem to be on the two real extremes of the economic spectrum. I'm curious to see how much, bang for the buck they will have, but we'll just outline what the major changes were. And then after that, maybe we'll talk a little bit about more generally in terms of how end of the year, could think about end of the year giving in light of other recent tax changes. So the two major changes that came about with the corona-related legislation called the CARES Act So one area is, I guess, on the high end of the income spectrum. Typically, there's a rule, there's a limit about how much of one's income you can give away and still claim a deduction against it. It's not focused on your ultimate, focused on your adjusted gross income, which is a stage of computing how much you've made for tax reporting purposes. And typically the limit of how much you can give away is either 50% or 60% of your adjusted gross income in any given year. There are other limits depending on the kind of charitable organization you give to and the kind of property that you give. Maybe we'll talk a little bit about a little more about that in a few minutes. But this year, Congress basically suspended the most significant limit and said that if you make cash contributions to what are known as public charities, and public charities are, again, not privately created charities, but the charities that people typically give to schools, to shuls, to other major public organizations, again, organizations that are generally supported by the public, that you can give up to 100% of your adjusted gross income, and there won't be limits. There are, again, some carve-outs to this rule, but that's a significant change. Now, that rule obviously is really only going to impact people, I think, on the higher end, that they're not, looking to live on their current year earnings, that they're, able to give more than 50 or 60% of their earnings away, or, have other unique tax situations. But on the higher end of tax planning, that, yeah, if someone is of significant means and is charitably inclined, then this year is a great year to give, because, again, you're not limited in terms of how much you can claim the deduction against giving even more than half of your typical earnings. So that's on one end of the extreme.
Well,
the other
thank you. That's very positive. So thank you.
Right. No, that's right. And again, and tax advisors are seeing, wealthy people who are charitably inclined think about gifts that they were otherwise going to be giving this year or giving down the road, and in their general charitable planning, that this is a good year to take advantage of it and think about being the opportunity to give more. So that's definitely a good thing. Congress then went all the way in the other direction to allow other people to participate on a much smaller scale. And I don't know if they were hoping that then this would maybe encourage people who wouldn't be giving to give on a much smaller scale. But I guess, like any good fundraising campaign, you have people at the top of the pyramid, people at the bottom of the pyramid, right? The big donations, the little donations, to all that up. And that is as follows, just not to get too technical, but when one files one's tax return, so there are two choices, that either one could choose to itemize your deductions, where you list the specific deductions that you have, be it for paying state taxes, mortgage interest, making charitable contributions, the like, and you can deduct that amount from your income, or you can take what's known to be the standard deduction. And the standard deduction is just a fixed amount that everyone can claim, regardless about the amount that they've actually generated in their own deductions, and deduct that from their income. Now, a couple years ago, what happened was Congress significantly increased, about 2-3 years ago, Congress significantly increased what the standard deduction is. It used to be in the neighborhood of $6,000, $10,000, $12,000. And in connection with other changes they were making to the law, it's now pushed up that for a single person, the standard deduction is $12,000. And for a married couple, it's almost $25,000. That, in conjunction with other changes that were made to the tax law, that certain things that had been deductible are now no longer deductible, like state and local taxes are capped at $10,000 to be able to deduct them, and that impacts, a lot of people in our constituents in New York and New Jersey, where there are a lot of, very high state and local taxes. So a lot of people who used to be itemizing their deductions and listing it separately are no longer getting over that threshold of are no longer getting over the threshold of the standard deduction, that it's worth their while to itemize their deductions, and they just claim the standard deduction, which is now a much higher number. Congress understands that if that's the case, and if people give away money and they're taking the standard deduction, they get no tax benefit, they may not be inclined to give anything. So for this year, they made a 1-year exception that even if you just claim the standard deduction, you can still take a deduction of $300 for a charitable contribution. Now, again, that seems like far on the other extreme. Someone who isn't, deducting enough to get over the standard deduction, and talking about a $300 contribution, which you would think would move the needle. But I guess the hope was that a lot of small contributions would add up. Or even if someone is otherwise giving, and their focus on the charitable giving isn't only limited to whether they're getting the tax benefit, but also because it's the right thing to do. At least now there's some additional small benefit along the way for the smaller deductions. So this year's changes, again, as I said, really are focused on one end of the economic extreme to the other, but hopefully will facilitate charitable giving in the country at large, but also, obviously within our community with the stucco needs that we have.
Thank you. That's really, really interesting and really helpful. So the end of the year is also a common time for people to be thinking about their yearly budget as they plan for budgeting for the coming year. So for someone who is budgeting for yearly spending, how should one plan their charitable giving or think about their charitable giving?
Right. So that's a good question. So that does relate to the point that I just made a minute ago, and I think it's important to keep in mind. So, as I said, people used to be, before 2018, people were accustomed to being able to itemize their deduction and deduct all sorts of other things and claim these itemized deductions, and that's the way they would do it. And people got a tax benefit for claiming their deductions. With the standard deduction now so high, a lot of people, if they give charitable deductions over the course of the year, they still won't have enough itemized deductions to be able to claim the charitable deductions by themselves. Mm-hmm. So one strategy that people are doing is kind of bunching their charitable deductions in the same year for basically, let's say, a 2-year period, that you make sure that, your charitable deductions, if you bunch them in, January and December of the same year, as opposed to letting things spread out over to 2 years. So with that combined, maybe you'd wind up getting over the charitable, the standard deduction threshold and get some benefit. So, you had mentioned before in terms of budgeting, whether you would have automated payments in terms of payments that stuccos, whether they be for shul dues or gifts to schools or, whatever this may be. So while automated payments are great in terms of as a budgeting feature, and obviously a lot of schools do that in terms of tuition, for charitable giving, people should really be mindful as to which year they're doing it. So even if, let's say, in 1 year you're not going to get over the $25,000 threshold, which is not for the itemized deductions, which isn't just based on stucco, it also includes taxes and mortgage interest and stuff like that you can deduct. But if you think that if you're able to bunch your charitable deductions in 1 year, you can get the benefits, so you could pay attention to make sure, we'll bunch, our shul dues and our gift to the school and, other gifts in the same year, and basically have 2 years of gifts in one tax year, even if it's really relating to different school years, different years for the shul. So people should really, try to be mindful of that. So, the saving mechanism in terms of the automated part is good, but the actual gift, I think it's important for people just to pay attention as to, when that's going, to make sure that they can really maximize the benefit of that.
Thank you. That's really, really helpful. And Rabbi Howard, can you speak about Maser and how that might play into this when people are thinking about a yearly budget?
Sure. So Maser is a significant custom that many people have in terms of giving charity. It's written about in the Shulchan Aruch as halacha, as part of Jewish law. But according to most, it's not an absolute mandate, but a very strong and very, very significant custom that one would try to fulfill. Maser means to give 10% of the income that you take home. From your work, meaning the income you take home, as opposed to percentages which go towards the actual expenses of making money. A company's revenue that comes in, we would be dealing not with the gross, but we're dealing with the net. There are expenses. One has to spend money to make money. That's a deduction, so to speak, from Meiser income, and so, as well taxes, according to most authorities, whatever has to be taken off for taxes. The Maser obligation is from your after-tax dollars. There are all kinds of significant discussions and detailed discussions about when people have multiple businesses, when people have capital gains and businesses that earn money from one transaction and perhaps don't earn money from a different transaction, how we put it together. The simplest formula, which is not enough, it's not enough, is what one takes home. Maser is not an obligation, nor is it a maximum by any means. Someone who doesn't make enough money each month to be able to pay the bills is not obligated in Maser and shouldn't be going in the red for Maser. And at the same time, Maser 10% is considered to be Mida Benonis, a nice middle ground of generosity, which is interesting. For many, in the world, the notion of a person giving away 10% would be considered to be super generous, and it is super generous. Let's make no mistake about it. It is a super generous thing to do. Yet in halacha, it speaks about giving 20%. If one is able to, that's really the more generous amount. There's a discussion whether it even has to be capped at that. At 20%, or where a person has greater resources, it would be more. But Maser is a beautiful feature. It's a beautiful feature of a home economy, of how people do their money. The idea that whenever we make money, we view it as something which, to some degree, it is for our personal use, but it is a charge which we have been given. We have a resource God has given us, and we're there to take care of it for the world. We're supposed to view ourselves in a certain sense as His hand, and we have a chance to share it. And the more we show that what's entrusted to us, we use well, not just for our own purposes, for beyond, but to help move the community forward, to help individuals. It's considered to be a very, very healthy thing. And there's a beautiful verse, one of the closing verses of the Tanakh, which says, please, God says, test me, make my day, says God. Go ahead, bring your tithes, bring your maser, see if I won't open for you the windows of heavens and shower upon you bracha, blessing, until you'll be saying enough, 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 enough. It's tried and true. It's one area which is tried and true, and it's the only area really in the Code of Jewish Law where it says, "Go ahead, try, and you'll see." Be a faithful dispenser of tithes, of charitable monies. Support Jewish communities, support Jewish life. Blessing will face you, God willing.
Thank you. That's beautiful. That's really nice. And another thing that I think is maybe obvious, but is just important for people to be thinking about as they're, budgeting for the year and making contributions, is if you in particular work for a larger company. Many companies do have matching gift opportunities, and so it's a great opportunity for you to be able to double your donation and your impact. It may sound obvious, but there are so many individuals who have those opportunities and are not taking advantage of. So that's also just something to be thinking about as people are considering their giving. So Josh, I know there's multiple ways to organize one's philanthropic giving in order to take advantage of tax benefits. For example, there's donor advised funds, there's charitable remainder trusts, and some people, probably most people, just give donations directly to an organization. So can you speak a little bit about the benefits and the differences between these different methods, and if you have any recommendations there?
Sure. So generally speaking, people want to give towards a charitable organization, again, a school, a shul, some other stock organization to provide food to people, whatever it is. Typically and very often people just give the money directly to the stock organization, and that's fine. And generally speaking, you get a charitable deduction for that gift. The issue is, again, sometimes a question of timing, that someone has money set aside, Meister money or otherwise, they're set aside that they want to give to tzedakah, want to make a charitable gift. But at this point, they're not sure which tzedakah they're ultimately going to give it to, or how much they're going to allocate the stuff between their various tzedakah priorities, which they're going to give it to. But the end of the tax year, December 31st is approaching, and you want to be able to take the tax deduction and not lose out on that, because to match it up with your income for the year, if it makes sense to do it in this year, even before you've necessarily finalized where the tzedakah priorities are going. So in that case, where you can't necessarily just give it to the ultimate charity, give it to the ultimate tzedakah, so then there are ways, organizations, there are entities, mechanisms that you should be able to give the money away now, get the charitable deduction today, and then, in the fullness of time, figure out where you're going to direct the money ultimately to go. So of those kinds of entities or mechanisms, there are a couple different ones. So one that you mentioned, again, is the donor advised fund. So a donor advised fund is, these are funds that are set up, they generally set up by the big, brokerage houses, you can call them, and have one set up for you, Fidelity, Vanguard, Charles Schwab, they can all set it up for you, and you give the money to them. And when you give the money to them, that creates the charitable contribution for you. And then when you figure out where you want the money to ultimately go, you call them up and tell them that you want to direct the money to go to, charity X. And as a general notion, they will follow your recommendation. Again, as its name, it's a donor advised fund. The donor, i.e. you, advises the fund where to distribute the money. As a technical matter, they're not absolutely required to follow your recommendation, but as a matter of being good for business, they generally do follow it, as long as the charity that you're recommending is within, meets within certain criteria. So that's, one thing. There are other kinds of things that people can set up, either on a more controlled basis. If people were to set up their own private foundation, you could set that up for yourself, and again, give money on your time frame, and then figure out when the foundation is going to give money away to the ultimate charity. And again, when it's your own thing that's set up, then obviously you have a greater degree of control. What comes with that is the rules are more restrictive in terms how the foundation operates, the kinds of property that you can give there, if you're not just giving cash, or you're giving other kinds of property, how those rules works, and there are other rules work. So that's more involved in setting up and involved in operating it. But again, because it would be yours, you would have a greater degree of control. But I know a lot of people do find that the donor advised funds, which you basically can just sign up for and have one set up for you, really work very well, especially if your ultimate targets of your charitable giving are just general, otherwise large charitable organizations, public charities. So it's easy to give to there. So that's just to keep in mind in terms of the timing. If you feel what you want to give, but you don't know who you want to give to yet, you should still be able to get the deduction today and figure out who you're going to give to tomorrow. That shouldn't be a limiting factor.
Okay, thank you. That's helpful. And for our last question that has come up is appreciated stocks. So what are the benefits to donating appreciated stocks or assets versus just giving an outright donation?
Right. So this is definitely.
Oh, this is what it's for Josh. I'm sorry.
You can answer too.
Always welcome. So this isn't anything new. It doesn't go back to the Shulchan Aruch. I don't think it's talked about there, but it does seem like it is a minhag kadmon of the Jewish people to find ways to do things in the most tax efficient way possible. And the basic benefit is as follows: that if I give a cash donation, so then I get a deduction for the cash donation. If I have an appreciated stock, right, I bought the stock for $100 and now it's worth $200. If I were to sell the stock, collect the $200, and then make a gift of $200 to the tzedakah, so that's great. I get a deduction for $200, but I also pay tax on the $100 that I made when I did the sale. So yes, I still come out ahead. The deduction is going to be normally at a higher tax rate than the capital gain that I sold it at usually. and the amount that I'm getting for the deduction is going to be higher than the gain that I'm paying the tax on. It's true you come out ahead from a tax perspective, but there still is a tax cost of doing it. So if you can give the stock directly to the charity, right? If I just give the stock directly, the tax law doesn't make me pay tax on the appreciation, on the $100 of appreciation that's there. I get my deduction for $200 and I never pay tax on the $100. So that's a great result. Again, generally the most advantageous way is if you're giving publicly traded stock to a public charity, which again, as I mentioned, covers your typical shul, your typical school, most publicly supported charitable organizations. If you're giving something other than publicly traded stock, let's say, stock of a closely owned company or some other kind of property, or if you're not giving it to a public charity, you're giving it to a private foundation, something like that, then rules come into play in terms of somewhat limiting the tax benefit in certain circumstances. But the most typical situation will be that, the tzedakos and the charities that are set up to receive the stock and to be able to deal with it are usually your public charity. So that's normally the mechanism that people use to give appreciated stock.
Okay, thank you. That's really interesting. So with that concludes our program for today. Thank you so much to you both for your insights and expertise, and a big thank you to everyone who joined us. We will be circulating a recording of this webinar, as well as a charitable giving form for you to use for your year-end giving decisions. Feel free to reach out if you do have any additional questions or are interested in learning more about the ways that you can become involved in the Teach Coalition. So thank you so much and have a great day.
Thank you. And thank you to everyone for your involvement in Teach. It's a crown jewel of our efforts helping the Jewish community, and we're very grateful for your participation and leadership. All the best.
Thank you.
Thank you. Bye-bye.